This week was mostly about inflation and how much or how little the markets actually cared about the older economic reports we've been seeing. We could start with inflation. We did finally get the Fed's favorite inflation report, that's PCE, but it was from December. That was delayed by the government shutdown, and the numbers did come in higher than expected, but markets didn't really seem to care much since it is old data, like I said, and a lot of investors already know that shelter costs are overstated in these reports. Real-time rent figures do continue to show that housing inflation's cooling, and future comparisons for January and February should get easier as well. And that just means the inflation ratings in the coming months do have a better chance of looking friendlier, but healthcare costs are something to watch. I've seen my insurance jump and heard the same from a lot of other people. And now we can kind of talk about the economy. We got the fourth quarter GDP number, at least before the revisions, and it came in weaker than expected. Growth kind of slowed, and part of that was also likely because of the government shutdown. And on the labor side, the headline numbers do continue to say things are, stable, but the cracks are still there when you look closer. Jobless claims did move just a bit, but those numbers don't really fully capture people who've exhausted their benefits or might have shifted into gig work just to pay the bills. You can't file for unemployment if you're driving for Uber, and most people can't cover their bills with the small amount that unemployment provides. Private employment numbers are continuing to show very weak job growth, and that just reinforces the idea that the labor market's not as strong as the official reports from the BLS show, and some Fed members are convinced of as well. We also did get the Fed meeting minutes this week. They're divided for sure, with some members wanting to pause, some wanting cuts, and even a few that are worried about inflation staying too high and are considering hikes. But what matters really looking forward is that the incoming Fed chair, Kevin Warsh, has been very clear that he understands the lag in inflation numbers and the softening labor market, and he's open to cutting rates later this year. It is really refreshing to see his forward-looking stance. But one last note here, the Supreme Court ruled against emergency tariffs, but that'll probably get appealed, and we probably won't have to pay those tariffs back. Now, if tariff revenue does fall, it might eventually mean more government borrowing, which markets will, of course, keep an eye on because it's inflationary and mortgage rates tend to move with inflation. But next week will be quieter. Only real market-moving news I'm expecting is PPI. That shows wholesale inflation. But that's it for this week, and I'll see you next Friday.